Hi friends. Have the bears gone away and the bulls come to play? Is it finally over? Well, that's the question many investors are asking. Have we seen the beginning of a new bull market, or is this simply a bear market recovery? Well, when thinking about that, we need to look at three areas. We need to look at technical analysis, emotional analysis, and then the third is leading indicators or earnings analysis. So let's just take that step by step. The technical analysis, when we look at things like a retracement level, it's a technical term when you're looking at charts and the 200-day moving average, and here's what it says. The S&P 500 is now trading at levels that every bear market since 1950 have indicated the beginning of a bull market, meaning there are multiple technical signals that a bull market has begun, a new one. Now let's move to emotion or sentiment as we call it. Investor sentiment was so low in June, it mirrored the 2008 and 9 financial crisis when we know that there was data nowhere near supportive of those kind of negative levels. So to say it another way, a little simpler, sentiment was so negative in June, anything could have shot the market up from there. Now let's look at the third analysis, which is earnings, or what we'll call leading indicators. Right now, roughly 90% of the largest 500 companies in the S&P 500 have reported earnings, and 75% of them have beat earnings to the upside. This is one indicator, but a very important one, that companies are still finding ways to make money. So when we look at technical analysis, when we look at emotional or sentiment analysis, and then when we look at earnings analysis or other leading indicators, there's a strong case that this isn't just a bear market recovery, but a bull market beginnings. Now let me throw a little cold water on that and pump the brakes for a minute. While there is overwhelming historical data to support that in a midterm election year, markets are overly negative before the midterms, and regardless of what happens, they are overly positive, as you can see in this chart right here. We see a surge regardless of the outcomes post-November midterm elections, and we see a lot of negative market returns and sentiment prior to the midterm elections. So we've got the indicators we just discussed. We've got the fact that this is a midterm election, and let me add another historical indicator, also seen in this chart here. The third year of a presidential term historically is leaps and bounds better than any other year. As you can see, the third year of a presidential term, which would be next year, it's over 16% annualized return, historically speaking. So all of this seems to be making a strong case that a new bull market is in town. We don't think that's true yet. We're not ready to declare that we've begun a new bull market, and there's a couple of reasons for that. Number one, things were so negative in June. This 15% surge that we've seen since the mid-June lows was the easiest to get. This next 10 or 11% to get back to the S&P 500 all-time highs is going to be a harder, slower march. The second reason is the market is not fully convinced yet that the Federal Reserve and inflation are buddies again. You know, they've been working as seemingly opposite ends of the spectrum with the intense raising of rates, but inflation still terrorizing. The market needs overwhelming confidence that the inflation issue is under control and that the Federal Reserve is not going to blow things up. And the third thing, which is a little bit of a deeper analysis, we didn't quite see the sell-off, or what we would call capitulation, in the market in mid-June, representing that all the skeptical investors or gamblers are out. So while we believe and have said for months now, Go back to our April and May and June videos when you were hearing recession, recession, sky is falling, and we were saying, no, we do not believe recession in 22. Hang on for the data. And here it is. It's been coming out for weeks now, and the market has begun to surge. And we've said since the late spring, we believed in a second half 2022 market recovery. And we still absolutely believe that. So for now, we're only sticking to this is a bear market recovery, but we are closely watching for if and when all the stars align, and we believe we could confidently say the new bull market has begun, but that's not yet. Hang tight. Stay invested. Thanks for watching. I'll see you next time.